Welcome to Disambiguation. I'm your host, Michael Fauscette. Each week, we interview experts in artificial intelligence, generative AI, and business automation to help business leaders understand how to use these tools for the biggest business impact. Our show today is the AI tax, why your agents cost more than your people, and what that means for scale. I'm joined by Joshua Gould, CEO of the BigWord. Joshua, welcome.
Thank you very much for having me, Michael.
You have very interesting background. I know you've been involved in language services for over 20 years, co-founder TBB Global, and now you're running one of the largest language service providers in the world, 80 countries, 250 plus languages. And you've certainly been living through the AI disruption for a lot longer than most of us, right? Since the late 1990s. So I'm curious about tell us a little bit about yourself and then about the BigWord and a bit about your journey to AI today.
Okay, well, originally I'm from the UK. I was born in the north of England, and I went to college, and after 3 weeks of sitting in the lecture theaters, I thought, oh my God, I am way too ADHD to do this for the next 3 years. Plus, I want to go and actually make some money rather than make debt. So I went to work actually for Coors Brewers, and Coors is not really known in the UK, but its brands are. And I learned to sell, and learning to sell was a really good kind of university of life. And then I took a job selling language services to the US in the night, because I live with students in a student house, and I wanted to be able to sleep in the day just like them, and then work at night. And then after the call center closed, which was roughly 10, 11 o'clock, because we were selling to the East Coast, I wanted to go and party. And it was a great life for a little bit. I remember my rent was $60 a week for a room. And, so I could do that. But at some point, I realized if I want to, really do something great, I had to be where the action was happening. And that was on Wall Street, because I was selling language services to banks. And so that's how I ended up in the US. So about 21 years old, half a lifetime ago for me, I moved to the US. And this is the official story. The unofficial story is the parties look great. I'd watched Sex and the City, and I thought I want a piece of that.
Why would you not?
Yeah, exactly. Or maybe I got the unofficial and official stories mixed up. But either way, that's those were the drivers. And back in those days, we had major disruptions because, and I'll intertwine the two questions here that you asked. We had just overcome a major AI disruption. We didn't call it AI because, and I think it still is called amongst the tech community, machine learning. I know AI is sexy, but we had a machine learning disruption. And really what it was the reuse of previously generated content, and where they could check it for in-context matching, and you could run statistical likelihood studies against segments. So we could look at a document and figure out whether a sentence, or which is roughly a segment, was a fuzzy match or an exact match or an in-context exact match to something we had previously translated. And then we could send this document segmented in a simple, we used to call them GUIs, but now they're, I think, user interfaces. We dropped the G. And I'm aging myself here for your audience. And we create simple interface, and then the translators could give us a 30% discount on things that were what we would call a fuzzy match. If it was exact, it would be a 90% discount. And if it was an in-context exact, it wouldn't even be translated. And that really was a huge disruption. It actually meant that about 70% of our revenue would disappear overnight. Mm-hmm. So we had to then apply wraparound services, and this might sound familiar to today, to the AI. And we decided that the best course was to offer integrations into the back end of these banks' content management systems and authoring tools. And I'm talking about when a content management system wasn't running just a website. You could actually send it to your printers. And so we went to the big banks, HSBC, UBS, Barclays, big banks that were doing lots of equity research, and they were then trading on this intelligence that was publicly available, but not necessarily in the language their traders were speaking. So we also then started building these automated workflows where we could, because a translator can only do 2,000 words a day. So we needed an automated workflow where we could split, an 8,000 word document into multiple, sometimes 20, 30 people. And we could have a team of specially trained editors working on it and return these within 40 minutes. So this is human in the loop, AI, and automated workflows. Hopefully I'm getting your audience excited here.
Yeah, it's interesting, and a good background, I think, for the rest of the conversation. So that's good.
Yeah, so that's how we got going, and then of course the Great Recession happened, and the party ended. And I actually lived on Pine Street at the time, which is behind Wall Street, if you know, the New York City area. And I could literally see people that I knew that I sold to carrying out boxes, and I would bump into them on the street, and they would be going. And then what I learned, everyone else learned, is that George Bush was leading the government, and he had this idea to pump hundreds of billions, if not trillions, into the economy through public sector contracting or government contracting. So it was a simple decision for a very young, simple mind to then pivot to go to the government where the money is. And fairly quickly, we found that those deals were lucrative, they were large, they were difficult and challenging, but they surprisingly were really happy to adopt the technology because they wanted to drive down price, at least at the unit rate. And they wanted to get things done quicker. And, it was life or death, a lot of this stuff. It was no longer about trading. And they would value this tech in a way that the private sector, funnily enough, wouldn't. And so it wasn't true with every section. We used to sell to prisons, and I would go around, mainly in the UK, and they would use typewriters because they needed to air gap. But, so it wasn't true for all of public sector. So that's how we got in the public sector business. And in 2013, I remained on the board of the BigWord, but I left to go and start a new company. It was largely funded by the BigWord. And it was a defense contractor because what I was doing was very much providing a tech-enabled service, but the service side that was human was still short-term contracting. So I went into the contingent workforce business and applied all of what I know to a business that had no tech, and I thought I could disrupt it, which we did, and government, what they would do, especially with like top secret cleared and human intelligence, they would have a small pool of people that would charge them, say, $250,000 to operate abroad. And I could find these people at $15 an hour delivering Domino's pizza because I could deploy technology to look through social media and identify, that's an Afghani. They've lived here over 5 years. I can't see any court records on them that are negative. Maybe they got married or something, divorced. They're going to be able to get clearance, and we can then deploy them. So we would go, and I used to remember, you get a Domino's pizza guy earning $15 an hour. Would you like to earn $150,000? Go home and help your country? And most would say no. Not for any money am I going back. But some would say yes, yeah. And and we built this really great business. In 2017, we merged the two companies back together. And and I took over as CEO of the whole group. But we built a company from scratch to $20 million, generating around $3 million in cash every single year. And then in 2019, I had this vision that we were going to essentially be a multilingual communications business. We were going to be able to deliver video, on-demand video interpreters, humans, AI interpreting. It was really easy then because we had neural machine learning. And we didn't have large language, but we, as a business, had a lot of corpora to train it in. And so we could have AI, we could have human on demand remotely via video and over the phone, and we could also do it like Uber in person. And then you had all the written stuff, so the subtitling, dubbing, editing as well with the new media services, and we were going to put it all in an application. We spent about $5 million building the user interfaces around the AI and the automation, and we'd previously spent about $10 million, so we were building on top of a system there. And just as it really started to happen, COVID hit, and it hit really hard our industry, because 47% of all the work we did was like Uber style, you know, like you tap a button and there's all automation happens, but eventually you get a human turn up, and you can have a human in the hospitals. Healthcare was a huge part of what we did. In most of the world, healthcare is public sector and government. That was pretty much our only private sector business in the US today. So we lost 47% of our revenue, and I had $200,000 a day of fixed costs. So it was a scary time, and I realized I had no rich uncle to call. Sadly, you know, yeah. So we stabilized the business. We moved more to digital. You know, necessity was the mother of all invention. We created really good video tools. And to cut a long story slightly less long, in 2021, we sold a majority stake to Susquehanna, which is a private equity fund run by essentially Susquehanna International Group, which is the largest options trading bank in the world, I believe. So, you know, we've kind of been through it. And then you had LLMs like a year later, just as everything stabilized, came out, and like, oh, I can do everything for free. And I think people have now gone on the same journey as I have since the 90s, realizing AI is spectacular. It can do awesome things. If you don't adopt it quickly and well, you're not going to be as cheap as your competitors, and you're not going to be as quick as your competitors. You're not going to be able to automate quality. However, it's not free. It's actually maybe not that much cheaper than humans, and you know, often it's more expensive than humans. And you know, we've been on that journey now with everyone else, except I think we probably have had a few more wins than I'm hearing out in the market space. Our operations costs went from an average of 18 cents in the dollar down to around 4.5 cents in the dollar, and that's through a mixture of AI and just non-AI workflows. So I call them self-driving workflows. But these are workflows that can essentially build themselves through optionality and optimize for what the individual client's looking to achieve. And then we also have been deploying AI interpretation, which interpretation is the spoken word, translation is the written word. Most people just call it translation. But ultimately, we always had the written word for a long time. In 2013, neural machine translation came of age. It was actually developed originally in the 60s by, I can't remember which university, but it was an open source program called Moses. And it was then became a hybrid AI program rather than a strict rules base. And in 2013, Google put a lot of money into neural networks, and one of their big programs was machine translation. We worked with them on it. They were a big client of mine for many, many years. They spent millions and millions of dollars on tuning it. So we've been through this, and we you know, and each time we go through it, what it does is it explodes the market size. So you do a much smaller percentage of a much larger market. And in the math in the language industry is it continues to grow by about 6% a year.
Hmm. Well, in the prep call, we were talking a bit about the math around this, and I know you've deployed a lot of agents in your call centers, and a lot of positive things out of that, right? I mean, they don't take days off, they don't have bad mornings, they they show up all the time, right? But the one thing you said that I thought was really interesting and surprising is that the those agents are actually more expensive than your human agents that they're supposed to augment.
Sure.
And I know you're running a call center in India. I'm just curious. Talk a little bit about the math and why that's different than what most people think.
Sure. So I'm probably going to get myself in trouble sharing the secrets, but I'll do it anyway for your listeners. We pay roughly about $5,000 a seat in the call center at salary level. What people don't realize about low-cost locations is the Dell laptops that they all have. They cost the same, as America.
Yeah.
And I know someone's going to say they're 5% cheaper, and they might be, but they're pretty much the same.
Yeah.
The building, believe it or not, but the square foot cost for our building in Pune, India, is actually more expensive than our call center in the UK.
Mhm.
So the square foot that they're sitting in, and if you've run a call center, you'll know that at least 50% of your cost isn't the salary. So I've got 50% of the cost is the same. The salary is much lower. We pay a really high salary for India, and we get really top quality people. I mean, our average call center person has 2 degrees. So they're smart, they speak great English, and they're very, very capable personnel. But ultimately, my all-in costs in India is somewhere around $10,000 to $12,000 per person.
Mhm.
Now, the AI, the license fee is around $3,500 to $4,000. So on paper, much cheaper. But here's the reality: the AI can't do everything. And
Right.
it's only as good as what you integrate it into, and that is a hidden cost. So we're still spending $500,000 plus on just maintaining the integrations into our databases. Because if you want to call up and say, cancel a face-to-face booking, it's got to be integrated in the back end of my database. And every time my database upgrades, I have to upgrade, it's on a 3-month upgrade cycle, 1 monthly patch cycle. So I have teams of people working on this, and that then makes that AI significantly more expensive because I've got to keep redeveloping. On top of that, I need a much larger infrastructure to run the AI. And, from an IT perspective, I've also got to tune the AI. So I have people
Mhm.
doing that. And then I have to build orchestration tools because it's not one AI license, it's multiple multiple versions, even sometimes of just the same one. So again, once you actually look at it, the cost is very, very similar to a human. However, the AI can only do about 70% of what the human can do
Mhm.
about 70% of the time, which means they're about half as adequate net as a human. Now, if I don't have them,
Mhm.
then you're going to sit on the phone to my call center, dispute a payment for a long time. And, so the service quality is much better. And
Mhm.
people tell me, Josh, but over time, the price is going to come down. And I say, based on what? Like I'm a facts-based guy, based on what? Like, what are you seeing? And they'll say, well, look at televisions. And I said, but that's hardware that could easily be mass produced. It didn't require a lot of electricity. And here's the facts I see. I was just reading about it this weekend that Anthropic has signed last year $1.4 trillion worth of deals with NVIDIA and all these different companies. Its revenue is only like $22 billion.
Yeah.
So think about how much money, non-CapEx, it's losing about $12 billion a year, which is like 50% of its revenue is its loss. Its growth rate is spectacular, which is why it's still worth a lot, but it's negatively scaling. And the math is always being by a lot of investors, well, it's only losing 12 billion. If I can get it to say 50 billion, it breaks even. But actually, when you factor in the costs of these build outs, it's not true at all. I mean, it negatively scales. No one wants to admit it because they don't want to miss the train. They don't want to be the idiot that never invested when they had an opportunity. And there's a FOMO going on at the highest levels of tech society in Silicon Valley and around the world. So you've got that as an issue. And then the big thing, and I was just speaking to my head of IT and infrastructure, and he was actually telling me, you are probably going to have to rebuild these data centers about every 4 years because the amount of heat that's going through these and electricity, and these chips don't last forever. And these servers don't last forever. And they're lasting way less than the experts predicted. And they're under immense strain. So if you think that that's like $1.4 trillion over the next few years, I can't remember exactly, I think it's 4 years. What happens in another 4 years? You've got to rebuild that. So I'm buying AI at a massive discount right now. And when I build my own, I don't build AI, I build around AI, and I take engines and I tune them. But when I do that and I deploy it to my client base, my clients are charged about the same as a human. And that's the only way I can make money on it, because I can't burn billions of dollars. I'm in the hundreds of millions, not the billions of dollars. So I can't afford to do that on their behalf. And I don't have investors that would do that either. So, why then deploy it? Why then have AI? Well, there's a couple of reasons. It's instant. As you say, it doesn't come in with a hangover or foul mood, or it doesn't commit a crime without you knowing about it when they're supposed to be, an anti-terror cleared linguist. It's stable. It's just there. And it has huge upsides. But I think we've got to be realistic about it. The integrations that you're going to need is what makes it magical. But they're very expensive to maintain. They need security patching. You've got to wrap around the ISOs that your clients require. All my clients require about 20 different ISOs. I'm a government contractor, so I have to have Cyber Essentials Plus in the UK. I have to be HIPAA compliant in the US. I have to be GDPR compliant in Europe, GDPR UK compliant in the UK, and I have to have server farms, to manage this and orchestrate all this data. I have to have IT teams doing quarterly business reviews with every single supplier that's supplying, doing the questionnaires, making sure they're compliant. I have my clients do the same to me. I mean, we do over 100 audits from clients a year, so I've got to pay for all of that, even when they're using AI. So it can't be free. And I think people, because they're so used to paying $20 a month for ChatGPT or nothing.
Or nothing, yeah.
They think this is free. So yeah, the good news is if you're a human, you can still compete today with AI. And until they figure out, and I think that they've deployed a lot of money to try and do so, how they can run these data centers more efficiently and cheaper, and how chips can get cheaper. And they will eventually figure it out, because there are small incremental improvements. But I think that the AI revolution is going to be more like a decade or two. I don't think it'll be like the internet revolution, which I believe the internet revolution took 3 decades, really going back from the 80s to say 2010, before we were really utilizing it to its best of its ability. I think this might be around half of that, but there's a lot of time to figure this out. And I've got a feeling that by the time the revolution has ended, it's just BAU, as what we would call as business as usual.
Yeah. I mean, we started to hear, there's been a lot of excitement around AI, obviously, and we're starting to hear companies talk about ROI a bit, but the numbers aren't really playing out yet. And I mean, obviously the infrastructure cost, everything it is still very expensive, and it hasn't come down yet. I mean, I guess it will eventually, I'm really curious about the kind of the focus, right? So we focus on the adopting it. We have to have it, and it seems like we're not really focusing that much on what's it doing, what's the what are we trying to do with it, right? What's the outcome? I mean, how did that happen? And then, how do you think companies can get the balance right between the investment you have to make and then what you're going to get out of it in the short and the long term?
Yeah. So I'll deal with first, how did it happen? I don't know who said it, but we say it a lot in America, follow the money. So you have these huge companies, Anthropic, OpenAI. They didn't exist that long ago, and they're raising billions. NVIDIA was like a computer game, like niche chip manufacturer.
Right.
So they're raising a lot of money by convincing everyone that this is a revolution. You get people like Elon Musk saying, no one will have a job. We need universal salaries for everyone that the government will have to pay. And no one's questioning it, because these are successful people that have done well, that seem to know what they're talking about. What you may not realize is you're being neuralistically programmed. Neuralistic programming is the science behind brainwashing, but it's real. It happens. That's how you can have propaganda, and it still works today. But everyone is being neuralistically programmed to believe that AI is coming, it's going to take over. We don't know exactly how it's going to take over. No one's asking that question. That's why these podcasts are great, because the mainstream media aren't really asking it. No one's asking, is it going to be profitable, or how does it scale? Those aren't being asked because they're inconvenient, because all the billionaires that control the media and own it, they've got their money stuck in these businesses, and they need you to keep retail buying to pump up the price. So I know it sounds like a conspiracy theory, and maybe it is, but but I'm seeing this. So as a CEO, I can tell you that we have had, and this is anecdotal. I'm sure there's research that I could have done before I came on with you, but we have had one of the greatest firings of CEOs over the last 12 months that I remember.
Mhm.
And most CEOs that I've met have been fired. And why have they been fired? Because their boards are insisting on deploying AI. And the CEOs are asking the questions that you're asking. Well, I need to figure out what I'm trying to solve first. I don't want to create a solution looking for a problem. I need to ultimately invest smartly, because most CEOs have been through this before many, many times. The average board member, not so much, because the last time this happened was the dot-com boom and bust, and that was in the 90s. And most board members now were very young then. They weren't on boards. So they've been fired. And this is a fact that I read, that 80% of CEOs that are hired, or over 80%, I believe it is, are actually first-time CEOs. And I believe that's because people are saying, I'll put my hand up, I'll give it a go. And boards are desperate because they believe that AI is coming to replace humans, and that my investment isn't going to be worth anything unless I can deploy AI. And if I can, maybe I can capture market share early, and so on. So there's a lot of hysteria. There's a lot of panic. It's not really based on data. It's not really based on facts. And then you get the people like you, Michael, who are out there trying to get to the bottom of some of these challenges. And I think most people come on your podcast saying the same thing. AI is great. It's going to be revolutionary, but it's way harder, way more expensive than anyone thinks. And it's going to take way longer. No one's listening to us yet, because we're not on the mainstream media. If this was Fox News or CNN, we wouldn't get on it, because no one wants to hear the reality. They'd want to live in La La Land for a little while. Now, that's dangerous, because what will ultimately happen is there'll be the counter to this. The people who bet against this, they'll become sexy because they short the market, and they'll make movies on them about the big short of the 2028, Great Recession or whatever's about to come. And they'll ignore the fact that it was nothing to do with AI. It was probably to do with the fact we've had a bull market for the last 15 years and it's time to correct. Yeah. But that's how this is happening. You're getting very clever people who understand that they can make more money through talking it up than actually delivering. And right now, I don't see, Microsoft's a big partner of the BigWord, and I love Microsoft, and I think they're great. But when I read their data, it almost looks like they're losing $4 to every $1 they're spending on AI. And I'm thinking, well, I like partnering with them because I'm getting all this free tech, essentially, right. 75% discount on their cost to make it. But I sure as hell wouldn't want to be an investor.
Yeah. It's interesting over the last few months, of course, the explosion around, AI's come now for the SaaS industry. And we've seen this SaaS apocalypse collapse. And I've been writing a lot about, let's wake up. The reality is that these enterprise applications are not going away. You can't do business without the data and the business logic and all these other things, right? The AI doesn't replace that. It does other things that are valuable, right? But something you mentioned, it really jumps out to me from a CEO perspective. We are going to see a lot of failures over the next year or so, right? We're applying AI in situations where we don't have clear outcomes, and we don't, really even have an understanding of what the process is. So when things fail, it's going to be seen as a big setback, and the boards are going to lose even more confidence. The management team's going to lose confidence, right? How should companies be thinking about, how do you stage your deployment to protect against this confidence collapse that really could be catastrophic for some companies?
Yeah, I can tell you, I sit in these boardrooms, and I'm also an investor in businesses. It's already happening. You're already getting very, very frustrated investors saying, we just spent millions of dollars on building out this AI. Where's the return on investment? And I guarantee you that's happening in, ChatGPT's board, or OpenAI, should I say. And there's going to be some big winners, and there's going to be a lot of losers. That was the same as the dot-com boom and bust. People forget that we have eBay today, thanks to the dot-com boom. We have Google today. Even Gemini exists only because of the dot-com boom and the money that flowed into that. And that's what happens. There are companies that had real opportunity because they existed before the AI, before the automation. They existed to solve real problems, and they're now deploying this new capability and new technology to solve those problems cheaper and quicker. And typically those that can do it, and they can do it profitably, are going to be huge winners. Mm-hmm. And then you're going to have all these companies that basically integrated with ChatGPT AI and didn't really add any value or solve a real problem. I'll give you an example. It's probably a bad example because I think Facebook will ultimately be a winner of this, but they started putting AI into WhatsApp. I don't know if you use WhatsApp, Michael, but it's so annoying. I just want to search my messages. I don't need an assistant. No. I have Kyle, who's my real human assistant, right. And I have Gemini, who's my AI assistant, and I have OpenAI, that's my other assistant, and I have Anthropic trying to tell me how to do my job better every 5 seconds on my computer. And sometimes I just let Copilot and Anthropic argue it out. I don't need a WhatsApp assistant in my personal messages telling me. And then I drive a Tesla, and all of a sudden Grok keeps popping up every 5 seconds. At least Grok solved the problem. I've got kids, and sometimes we'll be in a long car ride, and they'll do Grok's give me some questions, and they'll try and answer them, and then they'll argue with Grok, because I've got girls, so they'll argue of who's right and who's wrong on the lunar cycle or whatever. But a lot of this AI doesn't really solve a problem. It's a solution looking for a problem. And I think that's what's going to happen, Michael. I think you're going to find that people who are well-funded, who haven't spent a lot of money for the sake of spending it, people who are disciplined investors who may not be like the big word. We're not seen as a sexy AI company. Everyone tells me, you're not a real tech company. And I just say, okay, it hasn't. But I've been around 44 years and gone through 3 of these revolutions. And I'll be around in another 44 years, going through way more. I always say the big word, and I say this in most of my conferences and panels, we need to be cockroaches. Now, people think negatively of cockroaches, but I don't. They're not beautiful, and the big word isn't always beautiful, but we can survive a nuclear blast. We just somehow do well in the most uncertain environments. But why do cockroaches do well? Because they're built for that. And the big word is built for that. And there are other companies that are going to be built for that as well. And they're going to do well. Most of them, though, I was asked to invest in a company that makes AI for banks. And and they were bragging to me that they built this algorithm on a weekend. That's how good they are. And I was thinking, well, it's naive to think that there isn't someone in the banks that can do the same thing. I mean, these are big banks. So why would I invest in something that just takes a weekend to build? So, but yet they'll raise tens of millions of dollars and maybe they'll deploy that cash and add a lot of value, and I'll regret passing on it. But a lot of them won't.
Yeah. This year I've been thinking a lot about, we're finally seeing companies move from proof of concept and pilot into production, right? And it strikes me that one of the things, and frankly, we've done this with governance for years, right? But one of the ideas here is that we're trying to, we move into production and then we try to slap governance on the back end of it, right? Oh no, we've made a mistake. How do we do this? And because we're moving at machine speed now, things can happen much differently than they used to. And I think I've been writing about governance by design. I think this is really important. We have to think about how we shift that model and put the governance in up front versus after the fact, because after the fact, frankly, when you're dealing with AI, it's just too late, right? And I know you have a lot of experience in highly regulated environments. I mean, you mentioned HIPAA and government regulations, that sort of thing. I mean, what do you think governance should look like when the stakes are that high and, speed it could ultimately be your enemy as well as your friend?
Yeah, I think it's a good question. A lot of people don't know when they hear people talking about governance of what it really means. I think they know it technically speaking, that governance is governing and governing how something should be done. But so I'll try and break it down for your audience, into simple buckets. So the first thing is that your non-AI business has governance, even if it's unofficial governance. So, what are your operating procedures to stop a catastrophe or stop data falling into the wrong hands? So you'll have data security governance, you'll have cyber security governance, but you'll also have very human governance. So, HR rules, and we have HR laws. It's all governance. And I think that the way we make this new world work is, and what you're pointing out is, when you get it wrong in the human world, it's pretty slow. And it doesn't go wrong 30,000 times in the same 3 milliseconds. But when it does that in the AI world, where, for example, in my call center, one AI agent can call 30 people concurrently, and I have many AI agents. And if that call goes horribly wrong, it's times 30. Versus the human one where it's times 1. But what you have to do is you really have to treat your AI as human, and you have to realize that the margin of error just got way smaller. And I think that's what we do at the big word. our testing facility now is vast, and the amount of people we have in that testing facility. And the cool thing is you can use AI to do testing as well, but you don't want, the AI policing the AI without humans. And I saw a joke on LinkedIn. It was a cartoon, and it said, "Why aren't you doing anything?" And the guy had a QA title, and he says, "Because the AI is doing it for me." And and I think you have to be careful on that, because again, we underestimate human intelligence. My wife was telling me the other day how she knows someone that's having a relationship with AI. So I said, it's a superficial relationship. And she was a little irritated with me that I said that. And she said, no, it listens, it's really nice. So I said, I know that it's a pretend superficial relationship. And for a little while, that works. And you can con yourself into believing that this is, human-like intelligence or human intelligence, but in artificial form. But in reality, that relationship was the best it could ever be on day one. It can never get better. And what we as humans are underestimating is our capability. That actually cannot be, in my opinion, I might be going too spiritual here, Michael, for your podcast, but cannot be fully replicated. It can be largely, and you can trick people for a little while. And I think in terms of governance, just going back to your question, we need to have as organizations really strict rules on how we govern data now, the processes to deploy AI. There's a race out there. Everyone's trying to be first and beat their competition. But this is where the tortoise will win the race, and the hares will be the .com busters. It'll be the AI busters soon. eBay, Google, PayPal, they were real, solutions to really difficult problems. Machine translation came along in our industry, and all of a sudden you could translate your website and be international, even though you had no physical location anywhere other than your own bedroom. But what people didn't realize is we don't have logistics. So I can sell my antiques to China, from my little bedroom in Minnesota. Right. But if I can't get it delivered for any less than $20,000 because I've got to rent a plane or a ship to get there, right, then I can't, and I think that there's a version of that going on with AI, that we haven't built all the infrastructure around it yet to make it truly safe. So the people who are deploying it now quickly, they're taking a big risk. Some of those risks will pay off, of course. But in our business, we're very methodical. And it's slow and it's hard and it's expensive as well. But I believe that in 10, 15 years' time, the BigWord will be doing exactly what it's doing today with, of course, we won't even call it AI. It'll be like remember when you called it the World Wide Web? We don't call it the World Wide Web. It's just the net.
Yeah. It's just the net. Yeah, it's like that old Intel commercial, the little sticker on your computer says there's Intel inside, it's there, but do I really think about it? No. Yeah, that's interesting. Well, I mean, you've been through a bunch of waves of change with AI through the years. And, I know that we're in another one of these hype cycles, but from your perspective, what's this longer view taught you about how industries actually absorb change like that? And then what do you think the next few years look like for enterprise AI and for business as they try to move through this cycle?
Yeah, it's a good question. I would encourage your viewers to really watch the high risk regulated industries, because they're going to be the ones that are smarter investors. So watch the drug manufacturers. They have so much upside in AI, but they're not bringing out cancer drugs every few weeks like people thought 2 years ago. Why? Because they are deploying AI and they're going to get there, but they're going to get there methodically. So if you want to a simple answer to the question is watch the people that do this at scale. Watch the big words. Watch how we slowly bring it out, and the use cases that we use for AI versus humans. So, for example, in the court system, we're still going to use humans to interpret witness statements because it can't be 97% accurate. It's going to be 100%. Imagine being accused of murder and the witness is only going to be maybe 97% accurate, but also could be 85% accurate. You know, it would be thrown out of court. So we have to, but we're going to be able to use it on the triage side. So, you know, before that witness shows up and they're getting instructions, attend the court at 10 o'clock, and you're going to check in here, and you're going to go upstairs here, and that it's great. And then they're going to be on time, and the courts are going to run on time, and the witness isn't going to be terrified about being on the stand in a murder trial. Same in hospitals. You're going to have a human with your doctor, but you're only going to have a machine explain how to get to the doctor because it's on the 3rd floor and it's the 3rd room on the right. And, you know, for the blood test, maybe you're going to get an AI interpreter because we don't really, there's nothing that crazy about a blood test. You don't really need to know that much. But when it comes to aftercare and you've had your colonoscopy and they want to say, you know, if you see blood in your stool, call immediately. Well, that's a life or death internal bleeding situation. And, you know, so watch the companies that do this, that have deployed it before, and get it. You'll get a really good idea of what's going to happen. And I think it's going to take a lot of time, but eventually you're going to see drugs come out much quicker as we use AI models to predict what's going to happen, which then we can apply to the mice and the human trials. And there's still going to be human trials at the end of the day, you know, and you know, and the cycle of technology goes on. And this is just another, to your point, there's a lot of hype, but under that hype, AI is real and it will revolutionize the world.
Yeah. I mean, I certainly am using a lot in my business, and I see, you know, with my clients, I talk to a lot of people that are really seeing value out of it, but I also talk to a lot of people that are looking for value in the wrong places, right? They're not actually thinking about what the business outcomes are and how you actually get to that point and get what you want out of it. Yeah.
Yeah, and the unintended consequences. You could tune an AI version of yourself. You got a lot of podcasts. You could put a podcast out a day, AIU. People are going to get blind to that noise. It's going to be repetitive because it's not learning more. It's just learning off itself. Yeah. You know, so there's going to be a lot of unintended consequences. And I think one of them will be a data saturation, product and service saturation across different industries that don't really offer a lot of value, but because it's cheap, people will buy it up first until they realize there's just so much of this stuff I'm not interested anymore.
Yeah, that makes sense. Well, at the end of every episode, I like to ask the guest to offer something to the audience of value. So recommend someone who, you know, a thought leader, an author, podcaster, somebody that you think the audience would, you know, enjoy and get a lot of value from.
Yeah, so I'm a bit biased here, Michael, I have to admit, but my father has a podcast and he's an entrepreneur who sold 2 businesses. He never did it for the money. He made a lot of money over his time, but he's an insatiable investor. He's not a techie, but he really understands the power of technology in a way that most people in the weeds can't. He wrote a book called, I think it's called The Making of Mr. Irresistible. He came from government housing with no money, left school at 15, had a pretty difficult life and built, you know, businesses for and sold them for over $100 million each. In the 90s, he had a business that he sold it, did 24 million to Mike Mulligan, the junk bond billionaire. And it's just a really good, real story without hype. So I encourage you to watch Gold with Gould, and he does that with Cornell University.
Super. Yeah, that's a great recommendation. I'm going to have to check that one out myself too. So, Joshua, thanks so much for joining today. Really, really useful and interesting conversation.
Great. Thanks a lot, Michael, and great to be on your podcast.
Thanks. And that's the show for this week. Thank you all for joining us. Remember to like, share, and subscribe to the show. If you enjoy the show, please leave us a review to help others find us. For more research on AI and other software, check out arionresearch.com. If you're an expert in AI, generative AI, or business automation, either as a provider or an end user, email your information to disambiguation@arionresearch.com. Don't forget to join us next week. Disambiguation is an Arion Research production. I'm Michael Fauscette, and this is the Disambiguation Podcast.